Hey Matt, how's it going?
Good, thanks, Emmett. How are you?
Good, good. So hopefully my audio's fixed a lot for this week. I know it's been pretty bad, so I apologize to everyone who's forced to listen to terrible audio quality from me recently. But yeah, I mean these markets today, man, we're down what 2% on the Nasdaq. It's 2.5%. ARK Investment, their flagship fund, is down 3.5% more or more. We look at that a lot because that's a lot of what we invest in, those similar stocks. Not the same, there are some stocks they own that we are actually on the other end of in some cases, but for the most part, we think we're on the same level of them. But yeah, they're down 3.8% now or something. So yeah, the market's really taking a beating. What do you think is going on, man?
Well, it does seem to be related to the inflation fears that were kind of I think a big market scare earlier this year. We had back then, I think it was like February March timeframe. We had the 10-year Treasury was around 1.5%, rising up to 1.6%, and so that from a valuation standpoint that increases the discount rate that you need to use for equity analysis. And just the way the math works on that, growth stocks tend to get hammered a lot worse than kind of more stable companies that may be paying dividends right now, where the impact of a discount rate is not as drastic on when the cash flow stream is more near term rather than long term. So that seems to be the biggest thing kind of impacting the macro markets right now. There were these China scares that were seeming to march along, and I think that's still playing some sort of role in kind of market jitters. But I do think the big thing right now is just maybe an expectation or increased expectation that Treasury rates will eventually be rising, maybe in the first half of 2022 or so. But even still, these rates are not crazy, and I think a company like Tesla will not be impacted as much as maybe people think. If they go above 2%, then maybe you could start seeing some drastic impact. But I think right now it's just market jitters of this change coming.
Yeah, I think market
What's your
jitters.
take?
Yeah, market jitters, the macro economy. A lot of people have a hard time. I think a lot of people want to have a narrative to believe in with what's going on with the macro economy, but the truth is none of us really understand it, and there's more uncertainty now with the potential of this debt ceiling not passing, all this political talk and fighting and infighting around the debt ceiling votes, and I think that's just creating more uncertainty, which
Mhm.
makes people take risk off the table. And so I actually think that interest rates, will stay low for a longer period than what was communicated last week by Powell, because I think unemployment is not going to be as favorable as they're anticipating. I don't think enough people are going back to work. And so I think they're going to keep rates as low as possible. And I think it's going to be a question of whether technology, the deflationary effects of just technology innovation and accelerating that is going to be enough to offset the printing of more money that the government might have to do to keep rates super low. So that's going to be the thing to watch. That's my narrative in the macro economy. I'm kind of focused on, but no one really knows. There's chips coming off the table right now. That's what people are selling. Tesla's holding up pretty well, surprisingly, only down about 1% or a little more. And the S&P is down 2%, Nasdaq's down like 3%, and so forth. So yeah, I mean, this tends to happen around these inflection points of these big votes that the Congress has to pull off to get a spending package put together or debt ceiling increased or what have you. And hopefully there's a resolution from a legislative standpoint, and the market, takes off again once that happens, maybe next week. Let's see. So that's my thought, but we'll see how it plays out. Hopefully the dam's not about to break and the market doesn't collapse ridiculously or something. So yeah.
Yeah,
Um,
it doesn't, I don't get the impression that it's going to be that sort of, drastic impact. I do think it's kind of more about moderated expectations and maybe a little bit of sector rotation. And I think, like you were saying, people just taking a little bit of chips off the table while you got this inflection point. Maybe some people want to see how this will shake out over the next couple of weeks, months, whatever. But with so much money printing going on at the Fed, I mean, there's going to be more and more dollars chasing fewer assets. And so, you've got this backdrop of Tesla kind of raised expectations around what they're going to do both short term and long term. I don't know if you saw the Piper Sandler note that came out just this morning, but they raised their delivery estimates, they raised their earnings per share targets. So I think there's going to be a lot more analysts that are kind of rerunning numbers and saying, okay, regardless of what's happening in the macro market, Tesla, it looks like they're poised to kind of beat, both on volumes, but also on margins and on earnings. So that's going to be, I think, more important than some of these macro wins.
For sure. Yeah. I mean, the macro market is definitely moving today. Got to wait for the dust to settle a little bit more to figure out what the real deal is here, I think, and how serious this uncertainty is. But moving on a little bit, kind of an interesting news headline is the Polestar announcement with the Guggenheim SPAC, coming close to a more formalized agreement with Polestar. I know we've looked at that, and some people had questions about that, but I think that's interesting. They mentioned a 20 billion valuation. What was your thought on that, Matt?
Yeah, I'm having a hard time with a lot of these, new EV, SPACs that are, kind of making the rounds. I really like, putting valuation aside, I really like the technology and the platform that Polestar has, and same thing with Rivian. So I think they're kind of legitimate companies, and generally speaking, I really wish them a lot of success. But then you start looking at their valuations, 20 billion for Polestar, and what is it, 81 billion, I think, for Rivian.
Yeah.
Or no, it's not. It's like 51 billion. I don't think it's quite that high.
80 billion for Rivian. 80 billion.
It is 80 billion. Yeah, it's like
rumor.
And they're just on the cusp of starting deliveries right now. So like if you rewind 2 years ago, like that was more than Tesla was worth. So I think they're going to have a harder road to hoe than Tesla did to kind of earn those valuations in the long term, just because they're kind of at the very beginning of that S curve that Elon talks about, where your margins are going to be bad, your production issues are going to be plentiful. They don't have, I think, this software like full self-driving that they can kind of tack on to take a little bit of the margin impact off. So I think it's going to be several years of the market just kind of shouting a number, and we'll see where it winds up in the long term. They very well could earn it. I mean, I do think the EV space in general is in a space where all boats are rising, because I think it's pretty clear that EVs are going to win at the expense of ICE.
Everyone wants to find second place Tesla.
Yeah, exactly. And so maybe Rivian is, and maybe Polestar is, and so then maybe in the long term they're 100, $200 billion companies, but that's going to take several years and probably a lot more capital raises and equity issuances along the way. So I'm excited for them operationally, and I really do wish them the best, but I have a hard time kind of betting that they will do incredibly well in the long term. But what's your take on these valuations right now?
Yeah, Rivian is absurd to me. Without any deliveries yet, I don't care if they have 2 factories. They're building. 80 billion is just absurd to me. I could see, okay, if you're really a Rivian bull and you believe in their truck and think it's going to be like a bestseller, like the Ford F-150 one day, then maybe 80 billion in 5 or 10 years, would be their valuation or something. But on IPO, like there's so much to get to that point, so much risk. I don't think they're going to execute well. I saw there was this Bloomberg review of the Rivian just came out recently, and I just read some quotes from it on my Twitter feed, but I plan to read the article. But basically the Bloomberg reporter is not super thrilled. He thinks it's kind of like a lot of tricks put together into this kind of Rivian truck bed with things that are kind of delicate that could fall apart or break easily. And you have like cooking things and all these things that kind of get to the outdoorsy guy who will probably be happy to buy it and use it. But to be like a really mass produced truck is pretty far fetched. Is the gist I got, but I'll read the whole interview.
It's a really interesting point because, you know, I think Rivian kind of threw the kitchen sink at this and said, all right, well, we're not going to, you know, be Tesla. So let's try to appeal to this other niche. So they'd say, okay,
like
yeah, we'll be this like,
embedded in their truck and like, okay, cool. There's a flashlight in my truck.
yeah, it's like a flashlight. Then like there's like that opening that you can like store a snowboard in for some reason.
Yeah.
Like there's all this space, and
Like
yeah, there's like a camp grill and
stuff.
like everything but a kitchen sink. And so like that's
Yeah.
really cool. But at the same time, if you think of what Tesla's doing, Tesla's trying to strip out everything unnecessary from their design. And when they do that, and when they do that at scale of, you know, 500,000, 1 million units a year, you say, okay, they can actually generate margins, you know, in the 25%, 30% range. But Rivian, they don't have scale, and they're going with the kind of more complexity route up front.
Yeah.
Now that they're at a higher price point, so maybe they can do it.
Yeah, I mean, it's a cool truck. I would try. I don't know if I'd buy it, but I'd love to like rent one or try it out and stuff. But I don't think it's an 80 billion valuation company is the thing, right? So these valuations, you got Lucid, which is like 40 billion valuation. Oh my gosh, you know, just because they have people on the board, or the guy who's like running the ex Tesla engineer who probably didn't do much at Tesla, or I don't know. But then you have Polestar. I think they have the most potential. They're like farthest along. They're already delivering hundreds of these vehicles to people in my area, in the Bay Area at least. And I've seen one or two on the road. And they have a
thing I don't understand is, go ahead.
Yeah, they're partnered with Volvo. They come out of Volvo. So Volvo dealerships are their service network if something needs to happen. So they have some kind of infrastructure already in place. Obviously, they have supplier relationships through their Volvo, you know, franchise and such. And I just think they have the DNA to build cars. Maybe not EVs yet. They're trying to figure out how to build EVs, but they're doing the right things. Volvo spinning this out. And I think there's a Chinese, Geely or Chinese company that owns a lot of Polestar or something. So they're kind of spinning out into its own brand, its own entity. I feel like GM or Ford should be doing the same thing. They should spin out a whole different brand, not to be under the GM umbrella or be under the Ford umbrella, but maybe like affiliated, but they just have to keep it completely separate from their kind of OEM legacy stuff and let it be its own like seed to grow on its own, you know. So I think Polestar is doing that formula, which to me seems more likely to succeed than almost any of the other EV startups. I also kind of like Fisker just because they've been around the block a few times, Henrik Fisker, and you know, hopefully they learned something from failing the first couple times, where this third time they're gonna, you know, make it more likely to succeed. You know, so that's my just on the EVs, I guess. And yeah, the SPAC for Polestar, yeah, it's interesting.
It's the thing I have a hard time really understanding is how these valuations are, you know, being developed. And in particular, if you look at the valuation for Lucid, was it just shy of 40 billion, I think, right now, compared to Polestar. I'm like, I don't understand how Polestar would be like so much lower than Lucid. That just doesn't make any sense to me, given you know, the strength of the Polestar product from everything that we've seen so far. Like, actual reviews are great. The technology appears to work.
Showroom even. Yeah, they have like a demand issue. I mean, they don't have a demand. You know, I went to the showroom and they have cars readily available to test drive, and you can take delivery next month if you want to get one. And you know, it's in the Bay Area here. So they have a product they're shipping, you know, and it's working apparently. So. You know, I'd love to. I need to actually like test drive the Polestar for the next step. But I've sat in it and it feels comfortable. You know, for someone who wants an EV but doesn't want a Tesla for whatever reason, I feel like Polestar would be like the best option next to Tesla. You know, because there's some people that just don't want an Apple iPhone for whatever reason. You know, they'll just go. You know, so I think Polestar could fill that void over the medium to long term. We'll see. I mean, Ford's Mach-E and F-150. We'll see how that proceeds, but that could be also interesting.
You know, you brought up an interesting point I want to dive into for a little bit too, and that's, you know, the strategy of kind of stripping Polestar out of Volvo and kind of making it its own entity. I do think that's kind of what's needed in this day and age to you know, because you need a different management system. You need like a whole different approach to engineering. You definitely need a different, you know, kind of delivery and like servicing methodology. And so maybe you can leverage some of the dealer network, but that has some issues too. But you know, it kind of reminds me of what GM tried that back in I think it was either the 80s or the 90s when they launched the Saturn brand. They really launched it as its own separate division with its own separate, management. It was built in Tennessee, so kind of away from the UAW legacy in the existing plants that they had. And it worked reasonably well, but it never really launched, and they ended up, shuttering that brand when they went bankrupt in 2008. So you look at what they're doing and what Ford's doing now, and they're just trying to electrify brands like Hummer and like the Ford F-150. So they're very clearly saying we have strong brands, and I think they may be a little delusional in some of those opinions. They're reasonably strong, but I don't think they've got anything close to like a Tesla. And I think, Polestar already has a pretty strong brand, and despite the fact that it's new. So, I think companies like Rivian or people that have a whole different branding badging system are probably going to be the winners in the EV space. But we'll see. I could be wrong.
Yeah, we could be wrong. We'll just see how it develops the next, year. I still think, these valuations are crazy for all these other EVs. I think we're just trying to compare it to Tesla 2 years ago also, and that was the buy of a century. That was a discount of a century, and so we'll see where the real valuations are going to be in the long run. So moving on to Tesla, the Tesla part. This stock price has sort of really been on a tear. Minus today, the whole market's really crapping out. But other than that, relatively speaking, it's still holding itself. It's only not even down 2%. In the past, if NASDAQ was down 3%, Tesla would be down 5% or 10% sometimes. So the fact that Tesla's only down 1.5% or 2% when the NASDAQ's down 3%, that's really strong in my view. It's a bullish.
It was green for a little bit today, and especially when you consider how high it is right now compared to where it had been this time last week, or even late last week. It's still up significantly. So shedding part of yesterday's gains is not the end of the world by any stretch when we're right around 778. So it's are you surprised at all? Because I think we've been talking for a couple of weeks now about the potential of catalysts incoming. So were you surprised to see how quickly it showed up?
I'm not so surprised. I'm happy. I'm always optimistic or biased in how optimistic I feel the Tesla stock price is going to go when there's upcoming catalysts and such. And there's a lot of anticipation in the stock price ahead of these catalysts. I find, whether it's Battery Day or some Cybertruck unveiling or whatever, it seems like the stock a lot of times, starts trending upwards ahead of the event. And then like the few days of the event, it kind of starts crashing. And the day after the event, it crashes like 20% or 10%, and so I hope that's not the case here. And I hope that like when there's the delivery, I think a lot of it's based on all these delivery metrics that everyone's raising the last week or two, that now a lot of Wall Street analysts are thinking 230,000 plus deliveries. So for the quarter. So hopefully next, over the weekend when they announce whether it's 230 or 240,000, when they announce it, it's not going to, be a sell on the news type event where it's like buying the rumor, which is kind of right now, and then sell on the news, so that could happen. Seems to be the pattern, but hopefully it's not more of like a 5%, more than a 5% drop in my mind, maybe a 2% drop if we're lucky or something. I don't know. That's my guess on the immediate stock price behavior. What do you think about the immediate kind of stock price movements?
Yeah, I guess similar to you, I'm not entirely surprised. We've been talking about some of these catalysts. The beat on deliveries, which we've been expecting. Q3 earnings. I think analysts are starting to kind of wake up that their numbers are too low, both for Q3, but also for Q4 in particular 2022. So we saw Piper Sandler's big revision upward today. So I think we'll see more of those coming in the future, and it's always hard to say. I don't really generally like trying to trade around earnings, because even if they, like we saw in Q2, there was a huge beat on earnings, like a massive beat, even like way better than any aggressive bull was expecting, and the stock was, I forget if it was actually down or just flat, but
I think it was like flat to down a little bit. It didn't go up. Yeah.
So I think there's I do think it was reasonable that the stock should kind of recover to where it is, or potentially even a bit better. But I think the bigger catalyst is going to be, in the next couple months, how the beta program rolls out, because there's a lot of kind of FUD circulating right now. I'm not sure if you've seen some of the articles that have gone around of like, oh, this reckless safety program that
Yeah.
Tesla is, foisting upon unsuspecting victims of the public roads.
Suddenly there's so many crashes, yet there's been 0 crashes with 2,000 beta testers for a full year already. Yeah, it's crazy.
Yeah, the statistics on safety don't seem to matter. It's just the fact that, oh, look, that car was going to turn into that pedestrian, and it would have done it without the unpaid safety driver. That's just a Tesla fanboy. So like, there's this very strange narrative going on with the whole full self-driving program that I think it's really nonsensical in many ways, because people are just having emotional responses to it. They're not looking at the data. They're not looking at the bigger picture of how many accidents has it avoided. They're just saying it made a mistake. Look, we know it made a mistake. And Tesla's forcing the beta testers to sign an NDA, so they must be up to no good. It's just, I don't know, it's just kind of sad. But I think if that goes well, and if we see the pace of improvement on the beta really accelerate, as I think it should, then I think that could be another positive catalyst for the stock as well.
Yeah, I mean, when they released it, I think Friday night or whatnot, there was this this Twitter handle that started getting a lot of notoriety, and I kind of played into it, I guess, too. Is this guy Armin the Hacker, and he claimed to be an autopilot engineer on his Twitter profile, even, and he was talking and answering people's questions, and I just assumed like, hey, I saw someone else kind of retweet him as like an employee of Tesla, so I was like, oh, cool, and I was reading his tweets, I was like, this guy seems to know a lot, and it said autopilot engineer, and he was answering people's questions, and I just assumed it was like Elon, like finally giving like someone in his team like the authority to answer questions for him. Like, hey, Amin, why don't you just answer the questions? I trust you, or something. That's kind of what I assumed, and so I like retweeted it initially and was like, hey, everyone, this guy's giving us some interesting info about the Tesla autopilot. And the guy went on and answered so many questions, like in depth, like beyond like what almost anyone we follow, we think we'd be able to answer, about details of how full self-driving is working and such. But then a couple of people, the next morning I woke up, and a couple of people, that was like before I went to bed, an hour or two before I went to bed. And then I went to bed, and I woke up the next morning, and I guess overnight I'd gotten a couple messages saying like, hey, this guy might not be legit. Look at this or that. And I was like, oh, wow. And if you look at his tweet history from like a year ago or something, it shows that he doesn't work for Tesla. And he's like he's like a fanboy trying to get an invite to an event or whatnot. And so then I thought like, well, this guy's either like really faking it, or he's just like some recently hired Tesla employee that was like went up the totem scale fast, or he's like a disgruntled employee that just kind of went AWOL, and a recent hire as well, kind of went AWOL and disgruntled and just on his own doing stuff, so I wasn't sure which one of those it was, but I just like retweeted like, hey, everyone, be careful what this guy's saying. And eventually, by the end of the weekend, his Twitter handle was deleted completely, and some people said that guy was a fake. He wasn't real, but it was very odd, like how much he seemed to know.
And he was right on some stuff, like the fact that the full stack was not going to be released. Like, people were not expecting that when he tweeted that out. So there's maybe he was just right by chance, but also maybe he actually was who he said he was. So I'm kind of hoping he didn't lose his job. For tweeting some of the stuff if he was legit.
If that's what he said he was, he would have had to have been hired in the last like 6 months or a year, because tweets even like 6 months back or something were implying that he didn't work for Tesla. He was just trying to like, be a part of the, he didn't, he had some tweets like 6 months or a year, or less than a year ago, that obviously he didn't work at Tesla. So he would have been a recent hire, which is possible, but a little harder to. I feel like maybe he had a connection to someone that worked at Tesla and he knew stuff through secondhand knowledge or something. And I don't know. It's hard to know, but he did seem to know some real details that even some of the people we follow in our circle in the Twitterverse don't seem to know about Tesla's full self-driving. So it was interesting.
Yeah, I do wish there were more kind of sources of inside information like that. It's you kind of only get it from Elon right now, and his tweets are so hard to read. He's always like, oh yeah, it'll be released Friday or next Friday, or like, it's always unclear which Friday he's talking about. Like, it seems like the last couple tweets he's had, you have to kind of discern, okay, so does that mean like version 10.0 is going to be released this Friday or next? And then what follows after that? Like you got to kind of like piece it together. So
yeah, you do. Yeah. So yeah,
it's,
it's crazy. And I think there's a couple things like the guy said. He was saying like that full self-driving level 5 isn't going to be ready for years with the current hardware. So he was saying things that like some of us have been suspecting, but the fact that, and so I was a little down, I was a little down about that. Like, oh, maybe the people that are right about the cameras needing to be rearranged and all that. But then to find out that the guy's Twitter was deleted, supposedly because he, was pretending to be someone he wasn't. And, makes me realize like anything he said could have been kind of a lie, or not a lie intentionally, but just like his own like made up mind of who knows. He could have been some crazy person that just knows a lot about technical autopilot stuff, rambling off about stuff. We just don't know, but you can't take what he said as truth, really. So you just have to reset my brain from everything that guy said and kind of go back to, listening more to Elon and what he's saying and Andre, and try to read between the lines with those guys.
Yeah, it's hard to trust these outside sources. I mean, I remember even Leo Kogwan, the shareholder, there were a lot of people questioning whether he was legit or not. But Martin Vieca did confirm that that Twitter handle that's been going around is in fact the kind of real
Tesla.
Yeah, he's a very interesting guy. But yeah, people were skeptical of him because he says some things that appear a little kind of off the wall. But I think that's just kind of who he is.
Yeah. And so, I mean, I think next week we were thinking about kind of showcasing, we'll have the deliveries, presumably by then. We were thinking about what we were going to show your model a little bit for Tesla and what we kind of anticipate early for earnings. Is that what you're thinking, Matt?
Yeah, so I've been doing financial modeling on Tesla for a long time now. I've been giving the quarterly earnings estimates for quite some time. So we thought next week we'll have the the actual delivery numbers in hand, like you just said, Emmett, and so we can open up the model and I'll give my kind of walkthrough of what I'm estimating for Tesla's margins and earnings per share, and maybe we can even play around with some of the sensitivities around there and kind of the things that I'm looking at. So we can give maybe a kind of early sneak peek at a potential Q3 results for Tesla. So I think that would be very interesting to dive into that earlier rather than later. So yeah, I'm excited about that. And yeah, people have questions, you can ask them on when we go through that, and hopefully it'll be helpful in kind of establishing some maybe a range of likely outcomes for Tesla's earnings.
Yeah. Someone on the Twitter, on the comments here, said that that hacker, Armin the Hacker, Twitter was a 14-year-old kid uncovered by Tesla Facts recently on a tweet. So that person that seemed to know everything about the Tesla autopilot was a 14-year-old kid. so you can't believe anything that fooled us all.
No, or you could just interpret that in the worst possible way, the way a lot of journalists do. Like I'm sure Russ Mitchell would see that and say, oh, Tesla's employing 14-year-old child labor to support its dangerous autopilot hardware.
Yeah. So yeah, everyone put your questions in. I know some people have asked questions on Twitter already. We'll get to and all this. And next week also, we think we're gonna talk about kind of a new stock our fund has been investing in since the summer, and we've been getting more conviction on, and we're kind of preparing to release a little miniature like research piece on it. And so we'll think about talking about that next week a little bit too. But for now, I guess we'll just go to the Q&A portion of our chat, and we'll see what questions.
Do you want to talk safety score a little bit first? Because I know you actually have not been able to access your safety score, as I understand it. What's the situation there?
Yeah, I've been troubleshooting, trying to turn off my phone, turn it on, trying to sign out of my app, sign back in, trying to go to the app store and make sure it's updated. And then I went to my wife's phone, who uses the same sign in, signed out of hers, turned off her phone. She actually had to update the app on her phone because it wasn't auto updating. So I updated it and did all that again, and still wasn't working. I even reset the car, my Model S Plaid, reset the Plaid, and still didn't do it. But the latest thing I should try, which I just thought of this morning or after some Twitter chat, is that I should just delete the entire app from my phone and my wife's phone probably, and then just reinstall the app on our phones and maybe see if that fixes it. So we'll try that and see if it shows. But right now the safety score just doesn't show. It just doesn't have the underneath the upgrades option. It's just like it was. There's no safety score option to click on my mobile app. So yeah, it's annoying, but
yeah, it's unfortunate. I think a lot of people were having similar issues, though probably not for as long as you were. I know for me it took like, I don't know, an hour or two to actually get it all to show up. So a lot of people, I think, were scrambling, trying to figure out what was wrong. But yeah, I've not heard of anyone else but you having the issue for so long. It's unfortunate.
Yeah, I put a tweet out there just a little while ago, and a few other people said they're still having an issue, or one person said they had the Plaid that did issue, and they had to delete the entire app from their phone and back on. So hopefully that fixes it. I'll update everyone on Twitter with my low safety scores as soon as it's fixed, because I was driving a little crazy yesterday trying to get my kids to swim lessons on time and like ran a red light almost and stuff. So I'm sure it's not great, but
well, running red lights is fine. Oddly enough, like I've noticed, so like I'm rolling stop signs, and even if you accelerate really quickly, there does not seem to be, any issues. But like hitting the brakes, the only thing I've been dinged on of all those 5 categories is just aggressive braking. So like today I was driving with my wife, and I had it on autopilot. So I was like, all right, just let autopilot take care of it. Because from what I've read, you don't get dinged as hard if it's on autopilot, and autopilot does something. But the light turned yellow, and it was just my gut reaction was, all right, I've got to hit the brake. So I braked somewhat aggressively, and I was like, oh no, I think I just like crushed my score. And sure enough, I got out of the car and I got an 80 on that drive. So my average went from 99 to 91 just in one drive.
Oh no.
So I'm like, oh. And I've got
You're not that first group anymore. Yeah,
I know, and I'm a little bit bummed because I have my first road trip with a Tesla. I'm taking like a week from Saturday. I'm leaving, so it's like, all right. With Elon's newest time frame, I basically, if I got 100 on my score, then I could potentially have the beta on that Saturday. What is it, the 6th, I think. But only if I had a score of 100. So now I've got this, probably 1,600-mile road trip there and back that I'm not going to qualify for the beta on, unfortunately. So I'm going to have to just wait for the next round. But I do think, aside from just personally really wanting this, I think it's such an interesting way that Tesla is going about this. I mean, actually, it seems pretty clear they've gone through and done a regression analysis of their billions of miles driven and said, okay, these 5 behaviors correlate very strongly with crashes. And so having an individualized safety score just is so smart. And just kind of by happenstance, I got my insurance renewal stuff in the mail just yesterday. So my wife has like a gas car. She has a Ford Expedition, about the same cost as my Tesla. So it's interesting looking at all the rates that we have. So we drive very similar number of miles. Obviously, we live in the same household. So like it's a very kind of apples to apples comparison. But my premium for collision is 4 times higher than my wife's, which is just crazy. Because if you actually look at the statistics on Teslas in general, they are much less likely to be in an accident. So to have the collision part be 4 times higher just shows kind of the flaw in the data collection methods of the insurance group. So to me, it's kind of more evidence that current insurance model is poised to be disrupted, and I think Tesla is going to take market share from a lot of these auto insurers, at least for their own products, as soon as they can kind of get through the regulatory horror show that is.
Yeah, I'm excited to see where the insurance goes, and I really like what what you're saying about the safety score. The way Tesla is approaching this is, when Elon tweeted last night or today that they'll just release full self-driving to 1,000 a day for the people that scored 100, then 1,000 to the people that scored 99, and and so forth. Kind of just step it down smoothly and slowly. I think that's very wise. Number one, it like really incentivizes people like us to drive safer, because we all want to get that, right? So you're and then number two, like the first 100,000 Tesla drivers that get this are going to be like really safe drivers, so it's going to really flip the media's narrative on the head of like, oh, this full self-driving is dangerous. Like, what if there's like 50,000 full self-driving beta people out there and none of us get in an accident for like a year. You know, like it's going to be crazy if that happens. I mean, I don't know if that'll go that far, but if that was to happen, like how can the media spin this? I don't understand, you know.
They will. I mean, I just find it very depressing, the kind of media narrative on here, because it's, in my mind, such a noble goal of like really trying to minimize this incredibly deadly thing that we do. I mean, it's probably the riskiest thing that we all do on a regular basis. You know, we all know people who have either died or who have been, you know, injured in an accident or otherwise just, you know, experienced a lot of property damage. So like, it's a very worthy goal to go after, and the way that Tesla is going after it is, to my mind, very rigorous. It's probably, if you're trying to balance getting autonomy as quickly as possible in order to maximize safetiness, or in order to maximize safety, with minimizing kind of public harm in this interim period, I can't think of a better way of doing it than the way Tesla is approaching it. But the media, like, shouting heads are just saying it's reckless and dangerous, and you know, they never examine the counterfactuals of, okay, how many accidents may have been avoided from this technology, which is data that, you know, you can kind of interpolate or interpret to get some reasonable statistics on how many lives may have been saved so far. But that part of the narrative never makes it into these stories, and that's the part that I think is the most frustrating about the whole narrative.
Yeah, I mean, it's the whole media business. I mean, I don't fault the journalists personally themselves necessarily. I mean, they're there to make money like everyone in their job, and they're just kind of at the bottom of the totem pole of these big media organizations in charge of like writing these stories, and they have biases whether they know it or not. But then they're also trying to write these stories for maximum clicks, because that's how they get promoted or they further their career, is having stories that gain traction for their media organization. And so in order to do that, they have to write stories that induce fear, because us people, we want to click on things that induce fear, and that just, you know, speaks to our lizard brain more than anything else. We don't want to read about kittens being saved in a tree, or that there's less car crashes. We want to read about the car crash that, you know, killed someone in a very obscure way or something, you know. So it's just like it's just, I don't know what you do about it. You just need more awareness, I think, to rise above that kind of business model for people to understand. And then you need lawmakers to not play into it and try to seize power with lobbyists and stuff, because that's sort of what hurts it and plays into it in a bad way. So why don't we move on to like the questions, I guess, the question portion. We have some time here. Alex, you mind? Okay. From Hyper Minditer on Twitter, what do you think it will take for regulators to fully support the entire EV industry as well as blockchain? I mean, I think, you know, we're seeing the EV industry slowly but surely be supported by regulators, you know, starting with this new tax bill, but it's really playing to the legacy automakers who are kind of being forced, you know, to get into the EV space. And so it's just slow. And the blockchain, you know, that's a whole nother, I think the Fed is probably going to try to put some kind of digital money in place for fiat currency of some sort. But I don't know where they're going with that or when, or, you know, I'm sure there's a lot of discussions internally with lawmakers trying to figure something out with technology and blockchain. But yeah, I mean, I'm not really sure. What, Matt, you have any thoughts on those?
Yeah, I mean, I think, you know, the regulators are slowly but surely getting behind, you know, the EV industry. I think that's kind of inevitable. So if you don't get on that train, you're going to get run over, whether you're a legacy manufacturer or whether you're a regulator. People are going to just demand EVs. Blockchain, I think, is probably going to take a little bit longer. And blockchain itself is such a generic term. I mean, like, you could be talking about Bitcoin or a different cryptocurrency, or you could be talking about any host of additional, you know, technologies or, you know, programs which could essentially be leveraging a blockchain. So that, I think, will take longer, and it'll probably be more application specific of, you know, whether regulators get, you know, supportive of them, or if they're incredibly resistant to them, then, you know, blockchains don't technically need regulators. I mean, so you may have just a move towards more kind of underground activity. But I don't know. It's hard to really answer that one with if it's not more specific. So maybe we can move on to the next question.
Yeah. From Ted Yang, any good option strategy for Tesla under current running up? I mean, there was a good strategy, a month ago or a few weeks ago, if you bought calls, I guess, right? But right now at this moment, it's hard to say. I mean, it's always easy to play Monday morning quarterback, right? But I mean, I'm looking right now, it's at 778 a share on a down day. It's down 1.6% when NASDAQ is down about 3%. So, that's pretty bullish still. Like Tesla still seems pretty strong at the moment. We were talking, it depends how long you want your options to go out, I guess. And you just gotta, I think the option thing is what we sort of have professed or talked about is using something like the Interactive Brokers Probability Lab. And to be clear, you don't have to have an Interactive Brokers account. You can actually sign up for a free like simulated account online with Interactive Brokers, and I'm pretty sure you get access to the Probability Lab with that. And then you can plug in a stock and an expiration date for an option, and it shows you the probabilities at certain prices on the bottom of what the options markets imply as probabilities. And so in your head, what we talk about is like in our heads, think of a probability, like that you think something's going to happen, and then look at the probability of the options. I view it sort of like sports betting. Like when I used to bet on football regularly, I haven't bet on football in a while, but when I used to every week, like think about what I thought the next week's matchups were and think about what I think the spread should be of a game, given who's at home, who's away. And I'd write it down myself. And then I'd look at the betting lines by Vegas and I'd try to match it up. And a lot of times it'd be like pretty close to where I'm at. But then there'd be some that are like way off. And they're like, wait, why is the Vegas odds so off on that one versus what I think? And then I'd bet on the one I think. And, I don't know if I did better overall or not, but that's just sort of the strategy I'd take to kind of looking for options if you're going to buy call options, for example, or put options. I don't know, Matt, what do you think about that option strategy?
Yeah, I think when the stock was under 600 a couple months ago, it was, I think the selling the $1,000 put was like a home run idea. Like, okay, yeah, that obviously makes tons of sense. Right now, where we are, I think, selling those puts is not as attractive as it was. And honestly, I think kind of buying the calls is not as attractive as it was. I still think there's room for a decent amount of upward movement. Gary Black, I tend to view things very similar to the way Gary does. I try to go kind of like middle of the road with a lot of my analysis and stuff. And Gary's calling for an $1,100 price target in the next 6 to 12 months. And he doesn't include any value for autonomy, so for robo-taxis in that price target. And I think that's maybe slightly on the aggressive side if you're not going to give any value to robo-taxis, but I think it's maybe slightly on the conservative side, given the fact that there is potential that FSD could show huge improvement. So yeah, I view that as kind of a reasonable price target. It wouldn't surprise me if it's around there, 6 to 12 months from now. But if you look at kind of options as they're priced right now, there's not a huge amount of upside, if you were to make it an investment on just that alone. So yeah, I think right now maybe holding equity may be the best bet, but I do think there's room for if you go out to like 2023 or so, then I think there's a reasonable chance that we could be kind of well north of there. But obviously not investment advice, and those are really risky, and frankly, I just don't think the pricing is as good as it has been 2 years ago.
Yeah. Next question from Glide Outside on Twitter. If investing in GGPI, would you recommend shares or warrants? I mean, the SPAC stuff can take a while to formalize. If they come up with like a ticker symbol for Polestar, there's going to be a conversion to the ticker symbol when it's kind of formalized after a vote. But that whole process, from some of the ones we've watched, it can take several months. From here it seems like. So, GGPI, that's the SPAC currently for Guggenheim, and then there's those warrants, which are like 6 years out, and those seem like a really good deal, like 6-year out options almost in a way. You can think of it that way, but the warrants are not issued by exchanges. They're issued by the company itself, is my understanding. And we're sort of new to warrants, and we've studied a little bit, but there's certainly some unfamiliarity with the warrants that to me, makes me more cautious than I otherwise would be if it was just like an options contract, for example. If it was an options on contract, a lot of these SPAC warrants seem like incredible deals, right? And so there's something missing there, I feel like, in risk. And I think it's the fact that these warrants can be called back early by the companies. And so I know there's like been horror stories of, warrants getting called back, and you have like 1 or 2 weeks to designate whether you want to get shares or cash issued by the company for the warrants. And if you're a broker, it has the responsibility to communicate that to you, that you have like 2 weeks to make this designation or whatever, or 1 week or 10 days or whatever it is. But if for some reason you miss that communication, you don't make that designation, then you could lose like 100% of the warrant value just because you didn't elect an option, So I've heard horror stories of that happening too. So if you're going to engage in the warrants, you just have to really stay on top of any news related to them, for sure, I would say. But they're just kind of a different animal than options. Although it implies a similar kind of risk reward in terms of timeline and strike price and such.
It does. I think they don't necessarily trade in the short term the way that you might expect that they would. I mean, the other thing that's different with warrants compared to options is that because they're issued by the company, there's a strong kind of dilutive effect. So once you get out past that strike, with call options, let's say you're deep in the money on your call options and the stock goes up, let's say $10 in one day. Well, you'd expect a delta of 10 on your call options. With the warrants, you won't ever have that delta equal the actual movement of the stock. So you'll never have a delta of 1 because as the underlying stock moves, there's a portion of that increase in market cap which has not been diluted by the warrants yet. So just as you move, just be aware that as you move kind of further past that that strike price on those warrants, it doesn't necessarily move dollar for dollar with the underlying. So they really are a lot different than options, and there's some risks that are different. And I really wouldn't advise getting into warrants unless you're very familiar with the risks, or you have maybe a longer term view that you want to hold this for 5 years, and you've got a kind of a mindset on where you think the stock's going to be in 5 years.
From Salza2 on YouTube, question: I have 6-figure gain on Tesla stock. I'm bullish long term and don't want to sell, but Tesla is 70% of net worth. Do you ever recommend protective puts to hedge against possible black swan? So this was sort of like my exact situation, like 8 years ago after the 2013, 2014 run up, I would say. And yeah, I mean, I had a big run up and it was most of my net worth. It still is, actually. I mean, but it was like to the point where it's like, I was living on a salary, almost paycheck to paycheck with, retirement. So, but you have a high 6-figure gain on the stock, and what do you do? The puts, I remember at the time there was like something similar with like a debt ceiling crisis going on, and everyone was talking about it. And I bought a bunch of puts, for like 2 weeks out, and they were expensive at the time. And it was like 5 or 10% of my value of my portfolio. So it was like, meaningful amount. It was like $50,000 or more I spent on these puts that were like 2 weeks out, because I was sure like, hey, there's a chance the market's about to crash here. And sure enough, the puts expired worthless, and the stocks went the opposite direction, ended up going up. Even though there was more chaos with the debt ceiling votes and stuff at the time, or whatever it was with Congress at the time with the budget. And so it's hard to say. I mean, when I tend to think when I feel fearful is like almost the worst time to buy puts. It seems like historically that's just been my own experience. It's like, except during the COVID crash, but I've never done very well buying puts, especially short-term puts, and long-term puts are expensive. And so I don't know. I mean, selling covered calls might not be a bad idea after a nice run up. I don't know, but do you really want to be, you got to talk to an accountant about whether it's long-term gains or short-term gains, or if you're in the US, if that would matter. If you're not in the US, I'm not sure, but you got to kind of weigh all that stuff and figure out. I don't know. Do you have any thoughts, Matt?
Yeah, I was going to say, I had a similar concern, probably about a year ago from right now. And Yeah, I was looking at, like 1 year out puts as well as a hedge, but the pricing on it was like, okay, you're going to be giving up a huge amount of your, if you wanted to like hedge each share, for example, you're giving up, probably $100 a share just to buy any sort of reasonable put, to go that far out. So I think maybe a better way to do it might be to sell an in the money covered call. So like if the stock's at 750 or something like that, and you don't want any more upside, but you don't want to pay through the nose on the downside, well, you could sell a 500 call or something like that. So then you could collect all that premium right now, and if the stock falls below 500, then you're even on your call, but you've lost all the money on your underlying shares. So it's a way to at least lock in some of your gains without necessarily paying for the cost of a put. But I'm not necessarily recommending that. It's just something to maybe look into.
Next question from Alex B. What do you think about Steel Dynamics and level of impact by Tesla? Yeah, I mean, Steel Dynamics I've been watching for a while. Full disclosure, my personal account, I bought some options a month or a couple months ago, but they performed pretty decently, but not, they were up big and then they came back down and now it's coming back up, so Steel Dynamics, it seems like the obvious supplier play to me in the US, given their sort of alliance, it seems like, with proximity for the Gigafactory and Starbase. Imagine all these starships they're going to need steel for, and all the Cybertrucks eventually. The Cybertrucks are getting delayed, I guess, so they're not going to be mass produced until 2023, it seems like, at the earliest. So yeah, I mean, it seems like a good supplier play to me, but we haven't really done a lot of due diligence on them. I mean, they're already, pretty sizable company, and I don't really know the founder or management that well. I just took a very speculative play in my IRA account on just a few of these options that have done all right. But have you looked at that at all, Steel Dynamics, much, Matt? It's just on my radar.
Yeah, I mean, it's kind of that whole theory of, if there's a gold rush, your best bet is not to invest in gold. It's to try to find gold. It's to, sell picks and shovels. And I think there's maybe some truth to that. I do like the company. I mean, I think their valuation is pretty reasonable right now. They've got a lot of growth prospects. So yeah, it's one I should probably dive into a little bit more, because I do think there's a reasonable amount of upside there. But I don't know enough about it
to get involved in a stock. We want to take like a significant dive into it. On a personal level, I'll take little flyers on things I have sort of a hunch on here and there once in a while. But we want to, but there'll be small positions like this one, for example. But to take a serious position, we'd want to like dive into it more, obviously. But it's something on our radar of things to potentially look into more. From Life at 130 beats per minute. I still love that username. What do you think of Ford's announcement to spend $11 billion in new battery and EV production facilities? I mean, I like it. It's just another announcement to me. I mean, I feel like I just get never-ending announcements from these companies for the last 10 years. I don't know about you, Matt, but I just feel like, well, we got the F-150 prototype, okay, and the Mach-E is actually being delivered, so that's good. That's progress, so let's see what Ford does here. Like another announcement, they're investing X billion dollars for this or that. They have a presentation showing the picture of the building on their tweet about it, Jim Farley and such. So it's exciting. I don't know if it's just a dream that might not ever happen, or if it's something that's definitely going to happen. And I think it was in South Carolina or something, going to build it, or one of the Carolinas or something is the plan. So
yeah,
let's see what happens. Yeah,
it's funny to me, because like all these companies were making fun of Tesla when they announced the original Gigafactory in Nevada. So it's like, oh, you're gonna like overbuild supply by that much, you think you need more battery supply than the entire world makes right now. Like, okay, you're gonna go and get yourself bankrupt.
Yeah.
And so they built that for, I think it was around $5 billion. The original Gigafactory. So it was pretty expensive for 35 gigawatt hours of production. Well, now fast forward a decade essentially, and Ford is doing the same thing. If you actually look at their announcement, it's like we're gonna have more, manufacturing capacity than the rest of the United States all together. So they're basically like using the same language that Tesla had with the original Gigafactory. Of course, it won't be that won't be true by the time this plant actually comes online, because you'll have all the new 4680 cells running. But if you look at it on a capacity cost per unit of battery manufacturing, it's a pretty pricey investment. I did the exact numbers on what I thought Tesla's costs were, capital costs per gigawatt hour, and I don't remember exactly what it was, but it was definitely nowhere close to $11 billion for, I think it's like 67 gigawatt hours is what Ford's going for. So, I think they're going to be at a cost disadvantage, and so that's going to increase the depreciation expense for every single battery that they produce out of this facility. The name is ridiculous, Blue Oval City. It's like a nod to the Ford logo. I'm like, that's the sort of thing that Ford execs are going to love, and the rest of the world is going to be like, okay, like, cool, Blue Oval City, awesome. Like, I just think it's such a cheesy name, like,
Yeah.
But yeah. Overall, though, we obviously need more battery manufacturing capacity, so I can't really critique it that hard, because it's a good thing at the end of the day. So I hope it's successful, but I think they're doing it maybe in not the most cost effective way.
Yeah, and these announcements to me mean next to nothing until there's actually producing and delivering stuff, but we'll see. Yeah. Wes Whalen says, what about Polestar makes you think they are competitive? I mean, Polestar, I don't think it's necessarily competitive to Tesla cars. I think they're competitive to all other ICE cars for sure, as an EV, a legitimate EV. And they're probably very competitive to virtually all other EVs. So almost nothing in my mind is competitive to Tesla's product, to be honest. But there are a segment of people that will want to buy an EV, but they don't want a Tesla for whatever reason. They just don't want to be, they have something against Tesla or Elon, or just in their head, they just don't want to have the same car their neighbors have, and they want an EV still, and so, or they want to get the next EV. They think they're going to get the next EV that other people will want, so there are those people. And I think Polestar is a top option for that. I think they have a huge network already. They have all the infrastructure in place to be successful. They're building them, they're selling them, they're delivering them. They have a service network. They have a couple of showrooms at least already, and so they're much further along than all these other EV guys, and that are kind of earlier along and just have prototypes and starting to get their factories set up or whatnot. So outside of China, I think Polestar, and then you have like the GM Bolt, which is a disaster now, and then you have Ford Mustang Mach-E and stuff. So outside of China, Polestar seems to be, one of the best options for a distant second place to Tesla, in my opinion.
Yeah, and I would just add, like, Dan Neal is one of the very few automotive journalists who I actually have a lot of respect for. He had a great article, I think it was last year, actually reviewing the Polestar. I forget what the car is called, but he basically said it's a really strong competitive car. For a lot of people, I've met a lot of people who just don't like the interior of the Tesla. They're too modern, they're too minimalist, they like their knobs. I don't really understand that, but like, that's fine. There's going to be some people who just prefer the aesthetics of a traditional kind of cockpit in a car. And for those people, a Polestar is a great option. So I think they'll do well. The product itself is pretty good.
Yeah. Next question from Alex B. I'm not optimistic about full self-drive in near term, but your interview with Chuck Cook still was like a cold shower a bit. Did you change your expectations after the conversation? Yeah, the interview with Chuck Cook was amazing. He has a ton of tremendous insight on being a beta tester himself. I have not been a beta tester, so I have a lot less experience, a lot less firsthand knowledge of using it to have a judgment on it. I've only watched a lot of the videos and tried to picture myself in the car as the people doing the full self-driving, and it's nerve-wracking. I mean, what I look at, which is hard to, I think, fathom, is the progress. And every 2 weeks, it seems like there's going to be some consistent level of progress going on. with these new updates. And the progress might seem, some weeks seem very minimal, and some weeks might seem more marginal or a bigger, measurable difference. So as long as this progress continues on like a cadence of every couple weeks, I am very bullish on full self-driving going into 2022. I could see, level 5 autonomy. To be honest, I could see it by the end of 2022, like being technologically there, like where, you're very comfortable. You'll still sit in the car, but you're just very comfortable just letting the car drive itself while you're sitting in the car wherever you're going. And once in a blue moon, the car will alert you when you should be looking out to take over or something like that. So that's where I view on it based on the progress they're making. So as long as this progress continues, like continuously every couple of weeks, I'm actually very bullish going into the end of next year as the technology kind of being there. Maybe the robotaxis the year after or something. I don't know, but yeah, I'm pretty bullish. What do you think, Matt?
Yeah, I agree. I mean, yeah, I've been watching Chuck Cook for a long time, and he's made this argument that robotaxis won't be possible with the current hardware setup. I don't know if that's true or not, but in my mind, it doesn't really matter that much. If it's not possible, Tesla still has great margins and can still deliver their full self-driving suite, because essentially the beta will allow them to achieve full revenue recognition from a GAAP accounting standpoint. So like all these concerns about Tesla issuing a refund, like that's not a legitimate concern at all. So the only question in my mind is, do you need a hardware version 4 to achieve robotaxi, like true level 5 autonomy? And if you do, they've essentially said that that's going to come on the Cybertruck, which is like late 2022. I think they're targeting right now. So it's like, okay, worst case scenario, the hardware to enable robotaxis won't launch until 1 year from now. Like that's not the end of the world in my mind at all. FSD will still continue to get more capable and get better. And I think most people aren't really expecting robotaxis to be reality, before 2023 really anyways. So, in my mind, it's not really that much of an issue. It's just going to be a great ADAS system for the foreseeable future. And we're hoping it can kind of make the leap to autonomy, to true level 5 autonomy. Whether existing Teslas will be able to do that or not, sure, it'd be better for the company if they could. But if it's just not technically possible, then that's all right. We've still got a great business. And in the long run, that'll just be a blip.
Next question from Dan Mac 51 on Twitter. Several weeks ago, the GSI team teased about a genomics play. Any details to share on it, or in general, or on genomics in general? Matt, you want to take a stab at that one? This will be the last question. I think we're kind of at the hour mark. So
yeah, I think we got a team meeting we're consistently late for. So yeah, this will be the last one. But yeah, so genomics, obviously Emmet and I are not genomics experts, but we do believe in the space. I mean, it seems pretty clear that there's almost a revolution in medicine happening by kind of unlocking the power of the genome. So it's a space that we're trying to learn more about. Yeah, there is one company in particular that we've taken a position in. It's relatively small right now. I don't think we want to necessarily disclose it. We want to get our research, I think, a little bit more firmed up. And also we kind of like to let our investors know first on some of these plays. So, but yeah, there's one company in particular that I think has a business that is undervalued, that shows a lot of promise. In a really kind of a novel genomics application.
And there could be a lot of companies out there like that, yeah. But there's one that you've stumbled upon that you feel like is strongly evaluated.
Yeah, that's a good way of putting it. Yeah. So, yeah, like I said, we're not experts, so we want to get our own kind of confidence level up and really understand this space before we start, parroting out, and then, everyone starts buying it and say, oops, it turns out I didn't really do my homework on that one. Of course, we could be wrong at any point, but we'd rather do our research a little bit more, aggressively before we start talking about it. So yeah, hopefully in the next, couple months or so, we can give a little bit more of the details on that. But yeah, that maybe we can just leave it at that for now. It's a space that I think a lot of investors would do well to understand better, because it's moving at a really rapid pace right now.
Yeah.
So I think it's encouraging.
Yeah. So everyone, just coming up soon. Next week, we're going to have sort of an introduction to the model that we believe for, or not introduction, just kind of reapply the delivery numbers, which we should have by next Tuesday, to kind of Matt's model, to kind of figure out where we estimate the earnings to potentially be. And also this week, we are interviewing someone who invested really early with me in Tesla back in 2011, or maybe it was 2010, 2011, 2012. In that range, we started investing together. He was a friend of mine at Interactive Brokers, and we're going to, just pick his brain on the early days of investing and his current insights on Tesla, because he still follows it very closely like I do, and very knowledgeable on the space. And then I'll make sure to, Matt, you wear your red shirt next week, and I'll get on the other side and put my head underneath that Good Soil logo, so it looks like a crown, so they can call me King Mehmet, and you could be red shirt man. We'll have to make
that was keep the YouTube comments coming. These are pretty phenomenal.
Yeah. All right, guys. Well, good chatting, and we'll see you next week.
Thanks, King Mehmet.